Stock invested for beginners. Stock market are crashing right now. So I'm going to talk about stocks that reported earnings last week and also 5 stocks that's going to report earnings this week and what could possibly turn around the stock market. And this is very serious. And right now stock market is down 1.84%. If you look at it on Friday, August 2nd, if you look at the past 5 days, it's down 2.37%. The past 5 days. Year to date, it stayed up 2.73%. So something happened. The stock market went up and then dropped from Saturday, Sunday. Thursday and Friday, it dropped. Nasdaq 2.43% on Friday. Look at that, 5 days. It wanted to go up, then it dropped like crazy. So something really happened. Look at that, 1.51% on Friday, and it dropped 2.28%. So you used to be Nasdaq when it's dropped, the Dow Jones went up because of rotation. Now everything was dropping like crazy. And did I make money? Yes, I made money on Friday, August 2nd, once the stock market was crashing. I also made money on August 1st. That was 2,000 plus. So the whole last week for 5 days, how much did I make? July 29th to August 2nd. So I made 5,000, 1,000 a day. So something happened. Last week, look at that, FOMC meeting. Fed Chair Jerome Powell, he said we gonna cut rates in September. It's on the track. So stock market were happy, so it went up like crazy. Then it dropped on Thursday because of ISM manufacturing. It was forecasted to be 48.9%, but it dropped 46.8%. So that indicated that economy could be heading to recession. So stock market is really crazy about potential recession and hard landing. So that's why stock market started to drop on Thursday and Friday. Look at that. And hourly wages, especially employment report, it was forecasted to gain 185,000 employment, but it came in much lower. So economy is definitely softening. So recession fear come back again. That's pretty crazy. So if you look at earnings report that reported McDonald's missed second quarter earnings revenue estimate, same store sales fell for the first time since fourth quarter 2020. Look at that. So look at the EPS 3.07 per expected, 2.97 actual, came in lower. Revenue 6.61 expected, then 6.49 billion came in lower. So you would think that McDonald's stock gonna drop, right? No, the past 5 days is up 9.35% because of recession fear. So McDonald's stock it doesn't beat S&P 500, but that is good during the recession. So that's why it's up the past 5 days. Look at Microsoft EPS beat 2.95 versus 2.93. Revenue also beat 64.73 billion versus 64.39 billion. And still, Microsoft dropped the past 5 days, 5.36%, because the intelligent cloud, which is AI, came in lower than expected. So it dropped, 28.52 billion versus expected 28.68 billion. So yeah, that's why it dropped. Microsoft Azure had fallen short of consensus since 2022. So that's pretty impressive. Revenue from Azure and other cloud services grew 29%. So see, so that's why if there is a recession fear, there is a sell-off, even though you beat EPS and revenue. And AI, people are worried that they might be overspending and they don't see the return yet. So that's why Microsoft stock dropped. AMD Data center sales more than double in a year. Look at that. AMD Services reported second quarter earnings on Tuesday. So 1 billion of share. It beat expectation, 69 cents versus 68 cents. Revenue, it also beat expectation, but it doesn't blow away expectation like Nvidia does. So what happened to the stock price? It went up after reported earnings, but because of recession fear, it dropped back again. Let's look at the next company, Pfizer. I'm not really interested in Pfizer because it doesn't beat S&P 500. We can skip that. AMT, 10%. It's up 10% because of it's in real estate. So when interest rate goes down, real estate tend to perform better. So that's why it's up. Would I buy this stock? No, because it doesn't beat S&P 500. Let's look at Meta. Oh, Meta is up. Then it pulled back a little bit because of recession fear. Meta shares pop on revenue and earnings beat better than expected forecast. You see, it's all good. It's all good. Earnings 5.16 per share versus 4.73 per share expected. Revenue also beat 38.31 billion expected, and it beat. Actual is better. You see that? And the guidance is also better. Analysts were expecting forecast of 39.1 billion, but the middle revenue guidance for the third quarter, this quarter, is 39.75 billion. Everything is perfect. It's great. Fourth straight quarter growth in excess of 20%. So net income also jumped 73% to 13.47 billion from 7.79 billion or 2.29 a share a year earlier. So everything looks so good. So the company they're gonna spend more money for next year, and which is good for Nvidia. So that's why I own Nvidia. The company eliminated a total of about 21,000 jobs over multiple round of layoffs. So more job losses, good for the company. So if you have a job, think about, hey, could I be replaced by robot and AI? If it does, you should start learning investing right now. Invest in stocks, invest in option trading, learn about option trading, advanced option trading. Yes, Lam Research LRCS dropped the past 5 days 16.08%. It's another value now. So I'm going to start to become interested in Lam Research. See, year to date, 5 years, 290.64% the past 5 years. So yeah, I'm kind of interested because it's trading at a value. So I might wait a little bit more. It still drops 717.27. Look at that. Let's look at Apple. Apple is overvalued in my opinion, but still jumped because it beat estimate. Sales wise 5% topic estimates as iPad and services revenue jump. See iPhone, iPad services revenue. Look at that. EPS better than expected. And revenue, look at that, 84.53 billion versus 85.78 billion. And iPhone revenue 38.81 billion versus 39.3 billion. And iPad revenue is better. The previous quarter it was worse than expected. Now it's much better. So the only thing that's not better is Mac revenue. And this is also better. This is also better. Gross margin is also better too. So yeah, Apple Store jump. Let's look at Amazon. Oh, it dropped. It's at a value right now. So it looks like it's pre-market after hours stay dropping. So it will be interesting. Amazon shares slides on revenue miss. It missed revenue and weaker than expected revenue for the second quarter and also for the third quarter as well. EPS 1.26 is better. Revenues below estimate. But AWS is something that I really like. It's better than expectation. Advertising came in lower, so that's why it dropped. But to be honest, I like AWS. Amazon continues to reckon with sluggish growth, yes, because of Temu and Shein. Usually, I do not like online shopping, so that's why I never started online shopping business because it's low margin business. You might think Amazon the most profitable business is online shopping. No, it's AWS. technology. So that's why I do not start any, online shopping business. AWS beat estimate growing 19% from a year earlier. And look at that, year earlier, and Microsoft, Google grew by 29%. So, but this 29% also include other stuff. For AWS, it's pure cloud infrastructure. So that's the difference. So next week, do I own Amazon? Yes, I own Amazon. So I still have about 16, 321. Right here, market value percent. Look at that. Let's look at US. This week coming, nothing news, not so many news. Initial jobless claims yet. If there are more jobless claims, stock market could be going down more. So yeah, we have Uber reported earnings. Year to date is 1.04%. Am I interested? No, it doesn't beat S&P 500, so I'm not interested. I don't like the business either. And SMCI, this company could be reversing. If they report really great earnings, it could reverse the stock market downtrend into a trend. So yeah, let's look at SMCI. Eli Lilly, yeah, it's a good company. Year to date up 35.84%. It's gonna report earnings. 5 years, it beat S&P 500, but I'm not particularly fond of drug company. If you know Eli Lilly companies, or if you're a doctor or pharmacist familiar with their business, by all means you can start investing in Eli Lilly if you know that it's gonna be a great business. Alibaba, no, I don't invest in Alibaba because 5 years, even though it's a great company, it doesn't beat S&P 500. No, because of China. They pay dividend, but doesn't really matter. Disney or 10-round company, no, it's not gonna perform pretty well the past 5 years. So I do not wait. I particularly do not like to buy 10-round company because it can be really hard to turn around. It's much easier to jump on a train that's going up than rather than try to turn around the train going down, and going back up again. So nope. So if you have any questions, comment down below. If you want to start opening a stock trading account, you can click on the link down below as well. Share, subscribe. I will see you in the next video. Bye bye.